Most Nigerian traders today falls into one of two traps. Number one is either they trap to scalp, staring at 1 minute chart all day, over trading, burning out and losing money to fix an emotion, or they buy and hold, watch their portfolio drop 40% and have to plan for when to exit. Well, there is a better way. It is called swing trading, and it is the most practical trading style available to all the traders who have jobs, business, and lives outside of charts. So in this video, I'm giving you three complete swing trading strategies, tested, clear, and ready to apply on any starting trading. Now, what is swing trading? Actually, swing trading means holding a trade or from anywhere from 2 days to several weeks, capturing one complete price swing from support to resistance or from a breakout to a target. Yeah? Unlike scalping, you are not watching chart every time, every minute. Unlike long-term investing, you are holding through 70% crashes. So you can be a student, a business owner, and professional and still swing trade effectively with 30 to 60 minutes of analysis per day. Now, let me give you the three strategy. Number one strategy is what I teach you here, which is the support band strategy. If you have not even watched that video, go to video 5 and watch how the support strategy is made, because this strategy is a support brand strategy, an upgraded version of the foundation strategy from our video 5. You already know the setup. Now we apply it specifically for multi-day swing trade. The setup rule number one is Bitcoin on your choosing coin must be in a clear uptrend on the daily chart. You will see a higher high, higher low, higher high, higher low. As it's going like this, you can enter the long trading. Probably it can come down, go up, come down, go up, come down, go up to the entry. So number two is that price pull back to a key support level that has been respected at least twice previously. Look at this space. Price keep up here and it's pop up. Look at what happened here too. It's keep up and it's pop up. Rule number three is that RS time must be between 30 and 45 on the daily chart during the pullback. If you look at this one, RS chart is between the 30 to 40, and then this is a big strategy that this thing might go up. Rule number four is that a bullish confirmation candle on the daily chart, hammer bullish engulfing or strong green candle close above support. This is what I mean by that. This is the bullish candle I'm talking about. It closed above the support level, but this support level and resistance level is a big lesson alone, only for professional traders. But the video is coming. Not all the support level is supine, and not all the resistance level is sustained. But when we reach there, I will explain what I mean for you by that. Now, what the next thing is just for entry at the close of the confirmation candle on the daily chart time, and your stop loss have to be below. Your stop loss have to be below of your entry. So that is it. And your take profit have to be the next resistance like this. And come, let me be in the resistance line. Your take level, your take profits might be at this point, which is 82,000. So now trade duration typically almost 3 to 10 trades. If you are trading a trade like this, it's almost 3 to 10 trades. Now let me show you a real example. If you look at this here, where the price in an uptrend pullback at the major support level, RSI drop. If you look at this here, RSI drop to almost 34 and it bounced back to almost 40. Price is clear in an uptrend at this point. Price is clear in an uptrend at this point. Entry here, stop loss entry. You can enter at this point again. You can stop loss below the place, and then you can expect your take profits at that moment. The strategy two is the breakout swing. This strategy to capture the explosive move that happens after a coin has been consolidating, moving sideways between support and resistance, and then break out above the resistance with a strong fall. But let's use the breakout of the support level. If you look at what's happened here, the price from here to here is consolidating inside the range. It's not moving downward, it's not moving upward. But what happened here? If you look at what happened here, you will see this bearish candle. It closes below the resistance. This is closing below the support level. Now, this support level has turned to resistance level in another form. Now, what happened again? Your bias here is to look for a short trade, because whenever the trade break down the support level, it's telling you that the break is coming down again. more is coming down. But if it broke out the resistance level, the trade is telling you is going up. The first rule is to identify a coin that has been consolidating in a clear range for at least 2 to 3 weeks. If you look at what happened here, this is daily time frame. If you see this one is past almost 2 weeks or 3 weeks. And then rule number two is that draw the resistance line at the top of the range. This is your trigger level like this, and then your support level at the below of the range. Rule number three is that watch for a daily candle that closes above the resistance level with significant body and increased volume, and watch for a daily candle that closes below the support level with significant body. If you look at what happened here, we follow the second rule, which this one is the daily candle and it's closed below the support level, and this one is giving us the high probability that the trade is coming down like what it is now. Then rule number four is that the breakdown candle must be at least 1.5 to 2 times larger than the average candle size over the previous 10 days. If you look at this candle alone, if you will see that it's bigger than all the candle we are seeing from 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, except this one, and it's bigger than this one too. So you have to always look for the bigger candle that is broke down or it break up the resistance. Now, one thing is that you will look for your entry on the close of the breakout candle or on a side pullback to the broken resistance or support level. Next time you are waiting for the entry, always let the candle finished. Once the candle closes the bearish, you can enter immediately or set your entry at the support level, but at the resistance level rather. But not every time it will touch back. But my advice is for you that you should enter immediately after the 12 o'clock of the closing of the candle. And your take profit must be measured below the next support level. Now, take trade already decision typically 5 to 14 days and entry on the candle close to below the hold to resistance, and your target equal to the range above everything. This is just like additional. This uses of two moving average to identify, but I'm not using it, and then I'm not teaching you because I don't want or I want pure price action trading. I don't want you to be getting confusion. Too many technical or too many indicator can take you confusion. Now is that how to choose which strategy to use. With the three strategies available, how do you decide which one to apply? Use strategy one, support band swing trading. You can use strategy two, and then you can use strategy three if you wish. But this swing trading has specific risk management concentration that differs slightly from intraday trading. Rule number one is use wider stop losses on swing trading. Because you are trading the daily chart and holding for multiple days, your stop loss must give the trade room to breathe. Normal daily volatility on a Bitcoin can be 3 to 5%. A stop loss that is too tight will be hit by a normal price noise before the trade reach its target. Now, when your swing trade move with distance equal or your original risk, move your stop losses up to your entry price. You are now in a risk-free trade. The worst outcome is break even. They remove stress and let winner up. Whenever you are in trade and then you are already in profit, the best decision for you is to move your stop loss to your entry so that whenever the trade come down or whenever the trade go up, if you are not around, at least you are making the profits like that. So three swing trading strategy, three clear rule sets, one simple selection framework. The strategy one I tell you today is support bands for establishment uptrend. The strategy is breakout or breakdown swing for consolidating market. The strategy is golden cross for new trend begins. Now, open your trading view right now. Look at the Bitcoin on the daily chart. Which of these three sectors is currently closer to the form? Drop your answer in the comments. I will reply to everyone. Subscribe to video 7. My name is Latif Sodi. I'm teaching newbie crypto trading, both technical and fundamental analysis. Love you all. Enjoy. Subscribe.